Like all you talk about is like all you see is entrepreneurship and all the wins.
Oh
and
yeah,
all the
here's like a Amalfi
successes.
Coast, and you're like riding in a Ferrari or
Deciding to
anything
make
like that.
money,
Like, nobody talks about
making money while you sleep.
Yeah,
and
yeah.
all like glorifying the entrepreneurship.
bullshit.
Right there, that story you just told right there, where you got 30 days, not against anything that you did in business.
Yep.
Everything was healthy.
Yep.
Just because the powers that be made a change. You're put in a position. That's where you lose sleep.
We live below the fold. We live underneath those incredible brands.
What is the vision? Right? So like there's a story, but then it's like, where are you trying to go? If it's compelling enough, then you start to get people to believe in it.
All right, here we are. We're back. I don't know what episode this is, but we're getting up there.
Quite a few.
Yeah, quite a few now. So cool. We got some good topics to talk about today. We took a little bit of a hiatus of a couple weeks off there to try to make sure we get the right topics.
Tour season.
Yeah.
Tour season,
As you
baby.
can see, I'm the world's greatest moderator. I'm going to switch seats with Rich and actually put Rich in the hot seat here and be the guest today and actually talk about something that I think a lot of businesses and entrepreneurs want to know. And I think it'll actually reflect with a lot of people. I did want to mention I was at the Apparelist event.
Nashville.
It was in Nashville. Yeah,
Okay.
It was in Nashville. And yeah, good city. It was one of the weeks that I wasn't drinking, so it's hard to be in Nashville and not have a drink and be at an industry event like that.
And do line dancing.
And do some line dancing. Yeah, I got the cowboy hats, cowboy boots. a little bit of
And Heineken Zeros.
that. Heineken Zeros.
Wow.
Yep. Yeah.
That's
so
impressive.
it was definitely tough.
That's
But-
very impressive.
But it was an industry trade show, the Apparelist, the Apparel Decorator Summit, and always cool to be there, see all the homies over there and talk to a lot of industry people. And believe it or not, I know we joke around a lot and we say we only have 4 or 5 listeners to this podcast,
Couple in Nashville.
couple in Nashville.
Nice.
Yeah. So some people came up there and they're like, hey man, we listen to your pod and we get so much value from it. And so I did ask a couple of them, what do you want to hear? Is there anything, specific that you like to hear? And, this kind of leads us into what we're going to talk about today is that they want to hear more about our story and maybe some milestones and things within the business that, not our story per se, because I think that's been told a few times, but like some milestones throughout the journey. So, yeah, Rich, we're going to talk a little bit about, and maybe you could talk about the topic itself, and then we'll get into some of the nitty gritty.
Yeah, I mean, when you came back, you said, one of the questions that were asked is like, how did you guys finance the operation? And for everyone that's in our space on the actual machinery, factory, decoration, warehouse side, knows that it's a very capital intensive project. It's not just, hey, let's get a laptop and contractors, right? This is for real life, big warehouses, lots of machinery, and all of that requires capital in order to do that. And so if you don't have Mr. Macintosh to reach out to, or your PE buddy, or whatever the case may be, then you have to find a way, somehow, some way, help me God, to fund the business. So, what do you think? You want me to go way back, or like how deep you want me to go?
Yeah, I mean, I think it's good too I think let's go back because
Go way back.
Yeah, because you look at Culture Studio now, it's a bigger organization and it wasn't always that way, right?
Yeah.
And I think from the people that I met, there's a lot of smaller shops, people just getting into it, maybe $1 million, $2 million top line revenue. And do they want to grow? Do they not want to grow?
Yep.
Those are some things they're talking about. So I think if we could talk about maybe just some of the milestones,
Yeah.
right? Wasn't always this big and there are some out of the box ideas,
Yep.
So what's the first thing that you remember?
I mean, I'm gonna take it way back.
Yeah, take it back.
And one thing that oftentimes people do ask is like, when should I do it and jump right in, or when should I not do it, or I have this idea, how am I going to fund it? And I think one of the most important things that we ever did was we never ever threw all of our life down the drain potentially for a good idea. Like we were always had, this is what we're doing right now to make money. this is what the dream looks like. And as the dream started to make a little more money, we still kept that other thing. Now, even if that meant being an electrician, maybe the worst electrician in local 701 history, not that I would know who that person is, but my photo may be on the wall at the local 701 IBEW or whatever.
You don't even remember.
I don't even remember. But I was an electrician running the business of Shy and Culture Studio at the nights and weekends. And so I don't think anybody should become homeless to chase their dream. I think it is so wise to do things in unison, in tandem, and take the opportunities in sequential order.
Right.
So rather than like saying like, okay, at what point am I just going to quit and potentially, not have any income coming? We never looked at it like that.
Right. We
were always, working at a nightclub or had a day job and a night job. And so, that was really, kind of, I'm going to take it all the way back. The first thing that I kind of always suggest to people is that, don't quit until that dream can suffice or more. And as long as you have the grit to do both, and if you don't have the grit to do both, I think that's another telling sign that that may not be your passion.
Right. May not be the journey you want to go.
May not be the journey that you really want to go down, because if it is, then it's not work.
Yeah.
It's fun.
Yeah. It's kind of like when I'm sure a lot of other business people, they get a customer that sends over the NDA. Like, I got this new project.
Yeah.
Here's my NDA.
The best idea in the world. You've never seen it before.
It's a sports licensing something.
Yeah.
And I need you to sign this NDA.
No problem.
Like, is what you're saying is maybe let's get started.
Just get started.
Get started a little bit. We'll get that NDA going at some point, but you got to take some swings, right?
Yep.
But so take us back to the beginning. You're mentioning the nightclubs, and one thing does lead to the other at some point. But like you said, not giving up, your main focus first to kind of try something else out. As far as like funding the business, so we're out there, we're throwing the biggest parties, Chicago ever had. Do they even have promoters still nowadays?
I don't even know. I think promoters are coming back.
You think
I think
so?
Promoters are making a huge comeback. I think that, actually tomorrow night, we're hopefully going to take some of our team to one of them. So backing up a little bit, Culture Studio was pre-seed funded by us being a promoter. Yeah. So we had some influence, in a small community, very focused on house music, had friends that were DJs, had some really great friends that love to go out and party. Our homie Chris was like the king of going out and partying, and he was really the brains of that operation. He put the whole thing together. And so, we would throw parties locally and then eventually all over the country and all over the world. And the funding that we made every time we threw a party, we would get paid at the end of the night. And all of that money went into, call it like the seed funding of Culture Studio. That's really how we built this little tiny studio, 900 square feet. So that's kind of why I say, do both. And, it's daunting looking back to like get off work, count the last register at 3:00 in the morning, and then go to work at 7:00, and sleep for 3 hours. I mean, we're 20 years old, 21 years.
You could do that in your 20s.
Yeah, like so totally different at this age that I'm at right now, 35, which is my biological age.
Not your chronological,
not my chronological age, but my biological age, says my new whoop. That will be really hard to do, so
you'd have to be 22.
You got to have youth, in order to do
your
that.
20s, that's what I'd say that's what your 20s are meant for, right?
Yep.
Is to go hard like that. I'm not saying partying hard, but going out there and just doing things that make you uncomfortable and go from one job to the next. Like, I don't know if you could do that in your 30s or 40s. I know for sure now that I'm in my 40s, that would be very hard.
It would be hard.
Yeah.
It's
been a long time since I've seen the sunrise in that capacity.
At night. They do the morning, we see them every morning.
The morning of. Yeah. Now I'm out there running and the sun's coming up.
Yeah.
But yeah, I mean, meanwhile, you're building a community, right?
Yep.
And we're doing things of that nature. But Yeah. So like then what? What's the next phase from there?
Yeah, and why I think that promoters are coming back is because the theme of our party was always that it was industry night. Like one of our biggest successes was on Sunday night, so it was very themed. We always had an incredible DJ lineup. It was never just like, oh, here's run of the mill, Joe John DJ. Like it was always a top notch DJ, somebody that was on the radio or somebody that everybody would come out and see. And we had interesting people and it was always a good time. So there was, I would say, like a theme or reason to go, not just like ladies night. Right. It was, and I see that coming back. I'm seeing people do stuff outside a lot more, which we did a lot of stuff outside. Yeah. And so, I think that era stopped for a little while. Was like it was like sports bars and neon. It was like sports bars and neon for a long time, and I was pretty disappointed in youth for a while. Yeah. But I see like a great glimmer of hope. But ultimately, like you said, we were building a community. We were making some money, and we didn't spend any of that money. We used all of that money to buy that first manual press. We finally got a 900 square foot little tiny, what we called the studio, and it acted as both the future culture studio as well as like the home base for the entertainment company, the promoter. And so, like you said, those things, very much worked in tandem.
Yeah. Yeah. I was going to say that. Well, first, like one story from the, from back in those days. Do you remember Bon V?
Yeah, yeah.
Good old Bon V.
Great.
You got to be old like us to remember a place like that. But Bon V was awesome. I remember there was a DJ that we had booked, came up. There's probably only 15 people in the crowd, 20 people in the crowd. Asian looking guy with long hair.
Yeah. A little guy named Steve Aoki.
Little guy named Steve Aoki.
Yeah.
No one really knew.
No one knew.
Back then. Now he's throwing cakes in people's faces.
Yeah, in Vegas.
You never know where it's going to start and who you're working with, right? And like,
I think you were right. Like we had a hard time even getting anybody in that day. Yeah,
it was really an empty crowd.
Yeah,
I remember that.
Same haircut. Great haircut.
Great haircut. Yeah, but leading like down the line, like we ended up doing some merch for the artist, and that all leads to something in the future. But okay, so now we're in the space.
Yep.
And now, okay, the times are changing. We're starting to see this business becomes a little more serious, right?
Yep.
It starts to take more of our attention. And I was there right there with you, and it was like, you have to start. You're maturing at the same time because you're in your 20s, right? Yeah, it's still you're trying to mature. You got a business to run. You got the four brothers.
How long can you sleep for 4 hours?
Yeah, and you got us all to quit our jobs, our real jobs. Joey was in construction.
Yeah,
I remember Joey was in construction
or deconstruction.
Yeah, actually, his picture's right up next to yours. And,
worst deconstructor ever,
worst employee ever. And I don't know where the hell I was, just trying to find life. So you get your family first to believe in the mission. But then how do you start to fund the equipment and the machinery? Because our first one was a 8-color manual press Chameleon, right?
Yep. So I think we were very blessed to have some people in our lives, and I would say for any young person, it is important to get that initial funding. I mean, how long can you do it on your own, especially if you just have nothing and, the club money or your day job may not be quite enough. And so we were super blessed that a friend of ours, his name is Juan Hidalgo, he sold a property or something to that tune. I know he didn't have all the money in the world either. But he gave us a loan. And that's something else I think that is important is like, if you do believe in yourself, a loan is an important thing to consider, and any good people, and we've just been, blessed by those good people. We're actually going to talk about a couple more of them. If they believe in you as well, then why not? If they have the means to do it, and you believe in yourself and you believe in the mission. And, I know our perspective has been like, so help me God, we'll pay that loan back, no matter what it took, even if it took, and the next one I'm going to talk about is like almost 10 years. But like, even if it takes that long, there's no way that the debt is not paid. So that next initial funding was from Juan a really tight friend, and he gave us the loan, and we're forever grateful for that.
A friend, and you said too, like, they believe in your mission, they believe in you, and I'm not going to say that everyone believed in us, and those that are listening, probably not everyone believed in you. There's always that one person out there, or group of people hating on you, or just waiting for you to fail. We probably have that. A lot of those.
Destined to be a garbage man was probably like often, you're
way outside of your skis on this one. But that's the other thing about starting small. Like, you don't bet the whole house on it. You're not going out and trying to get $1 million worth of funding when all you need is $100,000 or $50,000. Right?
Yeah, I would say that if you're borrowing money, you borrow the absolute bare minimum. And I also think any young person today can start a business off of next to nothing. And we didn't live in AI day. I mean, now like you guys got a real leg up today.
We didn't even live in Instagram.
Not even mobile days. This is pre-mobile.
iPhone came out the same year we opened up Culture Studio.
Yeah, how about
2008.
that?
How about that? And Facebook came out the same year.
Yeah.
All that happened the same year. But one thing I want to touch on, we can't gloss over, is what you're talking about is like you're borrowing money from a friend. The next story is going to be borrowing money from family.
Yep.
And you have to have a high regard of integrity, because sometimes that's why they say don't do business with family and friends.
Yeah.
Like I literally just saw like a post, like someone said, there was Jesse Itzler, who is, he makes our big ass calendars and all that. He's a very successful guy. And he's like, here are 10 things that I wish I would have known in my 20s. And he's obviously in his 50s now. And one of them on there was, do not do business with friends and family.
Yeah.
And that he says that probably because there's so many stories where that doesn't work out. It's not a good outcome. But if you have
thanks Jesse, stick to calendars. My take on that would be that, like, who would you rather spend your whole life with, and who could you believe in more? Now, like you were just saying, you really have to know the character of that person, that family member, that friend. And I think, you talked about like going to industry stuff. I think the most important thing that we had by, biological luck was us. Most people are not blessed with 4 of you together that carry that character and all have different skill sets. And, we had, the ability to bounce ideas off each other and go down this journey together. For many entrepreneurs, it is a very lonely journey. And so I think I'm humble. I'm so blessed to be able to have gone down this journey with you guys, never alone. Sometimes felt like in the alley and like there was like a whole gang against us, we had to lock the door shut tight, but it was still not alone. If we got beat up, all 4 of us got beat up.
I agree. Hey, Jesse, if you're going to go into a fight with somebody, go with family.
Who would you rather have?
Who would you rather have? So that's great. Let's talk about the next one, because like you said, like you have to know who you're going into it with from that side, but you also have the integrity and trust that you're gonna pay these things back.
Yeah.
And some people actually put some big things on the line for it.
Right? Yeah.
You're talking about Juan. He sold a house and had a little extra income. Next story is you're putting something on the line here.
Yeah. So the next one, we wanted to move out of 900 square feet and into the 15,000 square feet, and that's when we started to enter automated machinery. So no longer manual press. We were going to go into automated machinery, and my mom and her husband Joe refinanced their house and pulled out a home equity line, which at that point in time was like the most money known to mankind. Like we talk about, like there's $1 trillion companies today, and like I still don't even know like what is $1 trillion even, like how many dollars is that? And I have a hard time even comprehend it. That's why I don't watch the news or anything like that. They talk about $2 trillion deficit. I'm like, it's a whizzy wazzy at that point. Yeah. I'm talking about it was like $60,000, and it was $60,000 was $1 trillion. It was $1 trillion. And so they put the house on the line and took the home equity line of credit out. We bought our first automated machine, and we made payments on that thing for 10 years if it wasn't 200. Like, I mean, it took us damn half our careers to pay this thing off because every time we started to get ahead, we would need another piece of equipment. And then we would, start to get ahead and need another piece of equipment. And we couldn't pay these loans off. We had to plow every single dollar into getting more loans.
Yeah. And is the reason we go that route, or someone would go that route, is because you haven't built up the business yet to be able to go to your bank and say, hey, I need you to finance this for me. I already started with friends and family. You can't skip friends and family and go straight into conventional.
I mean, God bless you if you have a relationship with your bank already. That would be incredible. I mean, none of us had bank accounts. If they did, they were like Bank of America, personal savings accounts, and there was like $8 in there. So to like go to a commercial bank and like attempt to take a loan out, we have no assets. That would be impossible. Which led us into, I think, hopefully one of the kind of the best ideas, after that, as I say, we're kind of plowing money back into machinery. A cheat code that we stumbled upon somehow, some way, was called the American Express Financing. Yep. And so if you run credit cards, they finance you on the prior history of your credit cards. So meaning, let's say for simple math here, if you run $100,000 worth of American Express credit cards, they will then loan you, say, $50,000, right? They'll give you cash upfront of $50,000, and then they'll take 1/3 of every transaction that you run. So if you run a transaction for $9, so I'm picking very specific numbers. Yeah. If you ran a transaction for $9, they would take 3 and pay off that $100,000 or $60,000, $30,000, whatever it is. And so that was our ability to like just plow more money, buy another machine. So we bought our second auto, and then our third, and then our fourth, and we would just keep doing these American Express loans. Yeah. And the only downfall to that is you pay it off, and you pay it off fast. So 1/3 of every single credit card that you run, if you ran a $10,000 transaction or $20,000 transaction, you would pay that all back.
You're making a big payment on that.
Ultimately, crushing cash flow. But you still got what you wanted when you're a completely unbankable company.
Right. Now, I remember when you stumbled across that, and it was almost too good to be true. Yeah. Because it
was a 24-hour approval too.
Yeah, very fast approval. And I remember it's almost too good to be true because, like you said, it's based on your receivable. Yeah. Right? So you pay back on the transaction, so you're not putting cash up front, but it's taking it back on the payment back. So I remember that was like, wow, a huge milestone.
How did this happen?
Yeah, how did that happen?
Yeah, until we actually realized too, like how fast you would pay it off. Yeah. But yet then, so you were cash poor a little bit, doing that, but then you would pay that note off and you could do it again. So it was kind of like a really beautiful, nice revolving thing. I mean, if anybody runs credit cards, highly suggest that you reach out to you could just go online, AmericanExpressFinancing.com, whatever the URL is, put in in Google, and you could find it.
What size company you think would be good to be using that?
Any company that runs credit cards. I mean, pending, if you're only running $10,000 a year, you're probably not going to get a lot of money. You probably have to run maybe a minimum $100,000 in order to get any amount of money.
So maybe $500,000, $1 million company.
Great.
That's a good option for that.
Great option. Yeah.
All right, cool. Let's keep rolling from there.
Yeah.
What's the next biggest milestone that you remember?
The next one, we're still, we're a long time into the business. We still do not have a banking relationship. So I think anybody who's, 5 years into their business, or we might be 8 or 9 years, into the business at this point, we still do not have a commercial lending facility in place. Yeah. And so the next thing that we did was Joey learned that if you were to purchase M&R equipment, you can, in essence, lease them from a company called Beacon. And I don't know what their tie was, but they obviously had, I would say relaxed credit worthiness or relaxed, how they would look at doing the business because they're very familiar with the equipment.
High approval rating.
High approval rating, for an emerging company. And so that's how we continued to buy machinery, is through, in essence, leasing them. You can get it approved super fast. We would identify used equipment, almost always used equipment. We would lease it really quick, get in the building, and rather than, having this, big debt, of like a commercial debt at play, you just had the lease. Yep. The lease, rate might be a little high, but it was just, we looked at the monthly payment. Could we afford the monthly payment? We didn't look at the big number.
No. Yeah.
And, maybe foolish, naive a little bit to do that.
You
but
have to be a little naive.
It was kind of like your car payment. Like, can I afford $300 a month? Yeah. Yes. No. How? I don't care if it's, $2 million for the car.
Yeah.
How much do I pay a month?
But the asset's making money, right?
Yeah, exactly.
That's the one thing about, and that's like screen printer math, right? It's like screen printer math is like how many presses, that press can do 1 million, that press can do 1 million.
Yep.
Yeah, you got to feed the beast. It doesn't come with sales, I'll tell you that. It doesn't come with jobs running on it.
Yep.
But each asset, we always say that's a Lamborghini right there, or it's a Ferrari, and that the difference between those two is one's depreciating and one's going to make you the money. Right?
Yep. Yep.
But yeah, and I think Beacon's still a big player in the game, right?
Yeah.
Duffy is still a big player. So
Totally.
A lot of listeners out there, a lot of shops, I'm sure, have their loans with.
Yeah,
with
I mean,
Beacon
reach
right
out to them. Go down the lease rate. Why not? Again, like, if it does make money. I think sometimes, no matter what business you're in, the shiny object is just more machinery. And we always had the mindset of like, we have the capacity already, and then we put the machinery in place.
Yep.
Over, let's just buy the machinery and, hecky, we'll try and fill it. Never,
That's a quick way to put those presses back.
Quick
up
way
on the
to,
market.
for somebody else to
yourself
buy them
out of
cheaper.
business. Yeah. And I think there's a lot of companies that probably fall in that category. Let's buy all this equipment, and not small businesses, big businesses. There's big players out there that you see those machines for sale a few years later. It's just bit off way more than you can chew. We've always been the opposite. When we're bursting at the seams, that's time. Right? That's time. When we're utilizing every hour of the day, that's time.
Yep.
All right, cool. Maybe you can fast track to maybe some of the bigger moves,
Here's some of the bigger ones, and I could kind of bullet point them. Just hopefully we can give people, no matter what business you're in, you can think about, hey, which one of these options work for me. The other thing that I think people underutilize is the SBA. The SBA is an incredible lender. Reach out to your local, business community or your local commerce. Yeah. Like, and I'm sure they could get you plugged in with the SBA. Now, the SBA does need a bank to accompany them for most of these loans. And they do machinery loans. You could buy businesses, and you could also do real estate. And we've used them across the board. And so it was like the next phase for us was a partnership with a bank and the SBA. And so it was a lower down payment, only 10% down rather than your usual 20% down. Mm-hmm. And that kind of catapulted us into getting a commercial business lending relationship. Yeah. So my media training will leave me away from, throwing too many banks underneath the bus here, but
that's part of the story too. You don't have to throw names out there.
Yeah, banks, are a necessary evil. And I could say banks are like wives, right? Like, if you find a great one, hold on to her, right? Yeah. Because there's some bad ones out there. Yeah. There's some really, really bad ones. Mm-hmm. And we stumbled across a lot of those, in our careers. I'll give a highlight story as we moved out of requiring to go SBA, because one of the downfalls of the SBA is high fees, high rate, hard to approve, long process.
You can't pay it off early either, right?
Can't pay it off early. Usually a termination fee. Yeah. Everything in life, there's this, kind of, give and take for
pendulum.
Things. Yeah. And so a highlight memory, if we're, talking about financing, was, I just having a regular day, and we just get a random letter in the mail. And I get the letter, from the team, and I was like, what does this mean? It says all of your loans are being recalled. You have 30 days to refinance these loans or they go into default.
Yeah.
And, being a novice in business, I was like, but I've never missed a payment. I don't understand what you're talking about. Yeah. So I came by you, I came by Joe. I was like, I wish we had ChatGPT. I would have really, been able to ask it
prompt some questions right there.
How does a bank recall a entire portfolio when you've never missed a payment?
Right.
When you're producing beautiful financials and there's never been a break in the relationship, right?
What's the answer there?
Well, it is my understanding that this bank was sold, and part of that sale was to remove whatever this category was. Now, I don't know if we ended up in that category because of the industry that we're in, if it was events specific, or if they didn't like our margin EBITDA. I don't know what it is, but we had 30 days to refinance all of those loans. And I was thinking, in an entrepreneur's journey, to get a random letter in the mail that says millions of dollars need to be displaced in 30 days is not for the faint of heart in any way, shape, or form. And this is at a time where in no way, shape, or we had just been getting started with working with a commercial bank. And so
that could be a clip right there. All you talk about is all you see is entrepreneurship and all the wins.
Oh yeah, here's a Amalfi Coast, and you're riding in a Ferrari or anything like that. Nobody talks about
making money while you sleep.
Yeah,
all glorifying the entrepreneurship.
Bullshit.
Right there, that story you just told right there, where you got 30 days, not against anything that you did in business.
Yep.
Everything was healthy.
Yep.
Just because the powers that be made a change. You're put in a position. That's where you lose sleep.
Yeah.
Right. Those are those type of nights.
Yeah. And, going back, we want to make this positive as well, because it has been a beautiful journey. There's been some incredible people that we've talked about along the way. And, just Chris was letting us, in on, being part of the entertainment company, just like Juan was, so giving to lend us the money, and, my mom and Joe to lend us the money. There are incredible people at banks as well. And so in our absolute pandemonium to switch this out, Associated Bank was introduced to us, and they put us in the naughty boy camp. That's called asset-based lending, where you're basically lending on your receivables, very much like the American Express,
Amex.
And it's I say it's the naughty camp because it's, hey, you're just getting started. We're going to make sure that we look at your receivables. We comb through every single invoice on a weekly basis.
It's performance-based.
Very performance-based. And if you really have no assets to secure this loan, then they have to secure it with receivables. So again, these guys stepped in, and, to be completely, open and honest, from that point forward till as we stand today, they have been the most incredible partner for us. They've done all of our real estate. They've done all of the expansion. They did the expansion to Florida. They did the Chicago real estate, the Florida real estate. They've been absolutely incredible. They've, across the board. I mean, from the team that's, in treasury management to, of course, our direct contact, Danny. This is just the gold standard of how banking is done.
Yeah, it's nice to finally get to that point, and
yeah, but 17 years in,
so to the listeners, that's a 15, 16-year journey to get to that point.
Yep.
And one thing I've been able to witness the entire way is that, one thing that you have, and I think others should kind of adopt, is that unwavering pursuit to get to the better place.
Yeah.
I've been there through every single banker and every single transaction, and you don't just have to take it, right? You have to be smart enough to understand what you're going into, and you have to learn. It's like that. I guess that's the education part, right?
Yeah.
If you're ever sitting across the table from the suits, and they're talking about things you don't understand, they'll always pull one over you, right? Everyone's looking for their fees, right?
Yeah. It was funny from our meeting today. The whole team was looking for the aha, right? Okay, how are we going to sell this new product that we're launching? And everybody had these great ideas. Great idea number one, great idea number two, great idea. We were like, these are all great ideas, but there's only one single concept that makes this successful. And that's what you said, like perseverance. The ability to get up every day after somebody smacked you in the back of the head and redo it again, over and over and over, and never say uncle.
That's never scream uncle. And I think, as simple as that may sound, a lot of people just don't do it. All right. They just don't put that work in. So be on the right side of that. Be on the right side of putting the persistence and the perseverance in. Rich, I think this is going to be a valuable episode for a lot of people, whatever size business you're in. They probably have their own stories like that, or maybe when they're up against one, they can take some of this information and make a better decision.
Yeah, I hope so. And, we're always glad to talk to young entrepreneurs, whatever, anybody that is starting the journey, ending the journey. If you want to comment on any one of our videos or in the podcast or anything like that, we're glad to field those.
Oh, yeah. It appears we have about 10 listeners now, so let's keep going.
14.
Yeah, awesome. That's it. That's the pod.